Good afternoon, traders. Welcome to the afternoon market review. First, let's talk about the currency pairs. Markets focus on the April 2nd tariff plan has surged, with expectations pricing in a near 10% increase. However, limited concern over harsher tariffs leaves the room for negative surprises. The reaction has constrained the US dollar gains, pressured the stock prices, and also lowered yields. The growing fears over tariff uncertainty and its impact on US growth mirror the typical economic shocks. If concerns persist, I think markets may see a weaker stocks, higher volatility, and rising gold prices, while rates, except the short-term ones, are likely to fall. The US dollar's strength depends on how the markets absorb the shock. So next, let's talk about the WTI crude oil. The oil prices surged on Monday as Trump hinted at restricting Russian oil exports, pushing the WTI above $71 and Brent near $75. Key drivers included lower than expected US crude production and algorithmic traders adjusting the positions. Reports also suggest Trump is considering a secondary tariffs if Russia doesn't cease fire in Ukraine, which could significantly impact the global supply. Analysts also note supply concerns are dominating, though a weaker risk assets could shift focus to demand risk. EIA data showed US crude output fell to an 11-month low of 13.15 million barrels per day in January, and commodities trading advisors have cut WTI short positions and boosting the prices. Oil also gained support from a rebound in the S&P 500. However, Russia's crude exports hit a 5-month high in March, and US sanctions on its tanker fleet appears to be easing. Last, let's talk about gold. Gold's rally remains very strong, consistently exceeds forecasts due to two key drivers. First, rising physical demand and shifting macroeconomic conditions. Since 2022, central banks have significantly increased their gold reserves, doubling their purchases rate from the previous decade. And recently, investor demand for gold bars, coins, and ETFs has also surged, signaling a further upside potential. Additionally, as global central banks shift towards the rate cuts, the macro environment for gold is improving. While high interest rates previously suppressed the gold price, declining rates are now turning into a tailwind. As long as physical demand remains strong and monetary policy continues to ease, the gold's upward momentum is unlikely to peak in the near term. So that's all for today's afternoon review. Thank you very much.